I have got one of the best value stocks that you can buy right now. In today's video, we are going to go over Tencent Music. I'm going to break down the chart, go over the fundamentals with you, and give you my thoughts of where I think the Tencent Music stock is headed from here. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin. I am your host. In today's video, guys, we're going to talk about Tencent Music. In my opinion, this is one of the best value stocks that you can buy right now. It is oversold by a large margin, in my opinion, and I think there is tremendous upside from the current levels based off of all of the valuation metrics, the fundamentals, things like that. In today's video, guys, we're going to go over those fundamentals. I'm going to break down the discounted free cash flow sheet, and then I'm going to go over the chart and give you an idea of where I see the price headed from here based off of the technicals. Guys, it is super, super important in market conditions like this where everything's rolling over. The CPI data came out. The market had a huge sell-off on Friday, and everybody is kind of going to risk off, right? Nobody cares about speculative stocks right now. Nobody cares about what companies could do in the future. They care about what companies are doing today. So it is crucial to find companies that have real value, intrinsic value based off of cash flow, net income, revenue growth, things like that that actually matter. I think this stock could be a really nice cornerstone, or at least a stock to put in your portfolio that can provide you with enough value and tremendous upside with minimal downside as long as you're patient. Real quick, guys, before we get started, subscribe to the channel if you're new around here and want to see more videos like this. Come over and join us at the Patreon if you want to get all of our trade setups. And Day One Squad, I love you so much. Thank you for your support. Let's get started, guys. So we're going to go over their earnings report. So they posted their earnings on May 16th. As you can see here, guys, they beat on their GAAP EPS. They posted 9 cents, which was a beat by 4 cents. And they posted revenue of 1.05 billion, which was a beat by 69.96 million. Their revenue was down year over year. As you can see here, they lost about 11.8% growth year over year. So their revenue growth has been slowing. We'll look at that a little bit further when we look at all the fundamentals. But revenue from music subscriptions were 314 million, representing an increase of about 17.8 million, or 17.8% year over year. If we jump over here, guys, just real quick, the online users, mobile active monthly active users on online music was down 1.8%. It was also down 27.7% on their social entertainment platform. However, their paying users for online music was up 31.7%. But their paying users on social entertainment was down 26%. I'm just throwing this out there, guys, because I wanted to kind of point out that they are growing their average paying users. The monthly average revenue per paying user on social entertainment was up 8%, but it was down 10.8%, on their online music. I think Tencent Music, guys, is obviously a massive company right there, right there with their, it's an arm of the, gaming conglomerate, just Tencent as the parent company. These fundamentals are very strong, and the valuation is just too good to ignore, especially when you start looking from a cash flow perspective. So guys, when it comes to revenue, take a look at this revenue growth. I mean, going from 628.1 million in 2018 to 4.916 billion in 2021, and in their trailing 12 months, 4.7 billion. If you jump over to like year over year growth, you can see the year over year growth has been slowing, and they're currently sitting at negative year over year growth in their trailing 12 months. However, going from 600 million, guys, to almost 5 billion, it's going to be very challenging to keep up that insane revenue growth of 100% a year. So I'm not necessarily super concerned about that because they are still projecting to grow a little over 10% for the next 5 to 6 years. So not too worried about that. They're also slimming some of their operations, trying to run a little bit more lean, and they are buying back shares. We'll look at that in a second. When it comes to gross profit, same thing, guys. They're growing gross profit nicely. Not as such a large margin, but nonetheless still growing it. Same thing with net income, guys. Going from 11.8 million in net income in 2018 to 476.6 million in 2021. But as you can see, They had 571.9 in 2019, 636 in 2020. So a little bit of a down year, but they probably got a big boost from COVID, everybody being at home, listening to music, watching their social entertainment platform, things like that. Just real nice revenue growth overall. They're making net income. Their price to earnings ratio is like 17, so that one is a little bit high, but I care much more about the price to free cash flow. If we jump over to the balance sheet, guys, you can see when it comes to total current assets, 3.983 billion versus total current liabilities at 1.744 billion. More than enough cash on hand to take care of all of that debt. And when it comes to outstanding shares, take a look here, guys. Back in, let's see, 2019, 1.677 billion. Then 2020, they upped it a little bit, 1.692 billion. And 2021, 1.642 billion. And then in their trailing 12 months or last reported, 1.636 billion. So if they can continue to buy those shares back, it will drive up the EPS. It'll improve their valuation metrics, and their shareholders will see an increase of value. So very good to see. If they can continue to buy shares like it's going out of style while their stock is down this far, that would be very, very good to see. So keep an eye out for that. When it comes to free cash flow, guys, their cash flow is beautiful. Cash flow or free cash flow is cash from operations minus your capital expenditures. You can see here, guys, if you go from clear back here in 2016, the free cash flow growth is insane. But their last couple of years has been pretty flat, right? You got to minus off the capital expenditures, and I'm not that good at doing math in my head that fast, but you can see pretty standard, pretty about the same from 2018 all the way till 2021. And in their trailing 12 months, they're currently sitting at 923 in cash from operations, minus the 25 in capital expenditures, 898, something like that. So very nice free cash flow growth, guys. They're currently sitting at a price to free cash flow of around 8.2, something like that in their trailing 12 months. That is extremely undervalued. I usually like to use a 15 or 20 when it comes to a price to free cash flow multiple. So the stock could literally double and it would be sitting at a 16 on their price to free cash flow, which in my opinion would be a fair value. So that's very nice to see when a stock has 100% upside to still land at a fair value on a valuation metric as important as price to free cash flow. Last thing, guys, let's jump over. This is the discounted free cash flow sheet, a little bit of a different way of getting a intrinsic value than using a price to free cash flow. This takes, present cash flow and discounts it down. You can see on revenue growth, guys, I used 5% today for the next 5 years. If we jump back over here and we go to their earning estimate projections, you can see, guys, they're projecting to do 6.38 in 2023, 577 in 2024, 11 in 2025, 9.6 in 2026. So a little over 5% on average. So I just did 5. The free cash flow margin, I have it sitting at 15% when they are currently doing 19%. So I brought it down about 4%, and we're coming up with about $8.50 based off its intrinsic value today. So about 90% upside from current levels to be a fair value right now. Very nice, guys. I think Tencent Music is a great stock, and I think it could be a very good addition to any value portfolio or any well-diversified portfolio if you're looking for stocks that are gotten beat down over the last year because of certain things that are still a good company, still growing, still producing real revenue, real dollars. And if they continue to buy back shares, that will continue to make that look better and better. So let's jump over and take a look at the chart, guys. The chart's looking pretty bleak, guys. I mean, it's been looking pretty bad for quite some time. You can see, I mean, we peaked out back here in March, of 2021. We hit that high point of it was like $32. And then we have done nothing but make lower lows and lower highs ever since then. We have just continued to make, new all-time lows. It's been bad, right? We are currently in a downsloping channel. However, there's some things implying that the bottom might be being put in right now. We made that new all-time low back here on March 16th, right when the earnings came out. We rallied, got back above the heart line of the channel, and now we're starting to get that rounding bottom type stuff. I know we had something similar back here, guys, but if you take a look, we tested the COVID crash low, which was your heart line. You dumped, made your new all-time low, rallied, and then you make that rounding bottom. But that rounding bottom that you made back here was actually a lower low than your initial new all-time low. So your rounding made a new all-time low. Then you went back to test the top of the channel and dumped again. You stayed above the heart line, and then you had an extended drawdown, made a new all-time low, and now you rallied back above the heart line, tested not only the top of the, well, not quite the top of the channel, but that 594 level, which was the new all-time low back in December. So now you're getting that rounding bottom, but it is a higher low than your previous low or your new all-time low. That is what I really like to see, guys, because this chart has not made a higher low literally since the COVID crash. You can see there is not one higher low over here since back here after the COVID crash when it made a new all-time low, rallied, made a higher low, and then went to all-time high. So guys, we could be seeing some really nice stuff here. If we could, we tried to test and get outside of the channel last week. It got rejected and started to roll over. However, it's all about the follow through, guys. So Monday, it could gap up, get outside the channel, back test it as support, and continue to run. And if that happened, we could be in really good shape. Guys, we have got to get back above 594. Like, that is everything. Because if we do that, you see the 200-day moving average, it would come down, be confluent with that level. So you'd start to get that 200-day moving average. So you'd have a lot of different things happening at once. You'd break the channel, you'd break that previous low or all-time low from December, and then you'd also make a higher high than the previous high and confirm a higher low than the previous low. Guys, this is like a momentum shifting structure that could be potentially being put in, right? So we could start to see like a 3 rising valleys type stuff, where you get like that first valley, second valley, third valley. Then you could use your measured move. We'll look at that in a second. But if we jump over to the oscillators, guys, I mean, there's no real edge right now. Like, you don't have any like, clear bullish divergence implying a reversal's in, nothing like that. However, with the 3 rising valleys, as it develops, you could absolutely, create some like hidden bullish divergence on like your last valley. And that would be nice because that's continuation divergence implying further upside. That's what we would want to see. So you'll have to watch that. If we jump over to the weekly, guys, I want to show you more reasons why I think the bottom could be being put in right now. If we use our fib levels and we go from the COVID crash low to the all-time high, look at what we just did. We have a massive bullish engulfing candle right at that 1272. So we came all the way down, broke, made a new all-time low, and right when we hit that 1272, we created a massive bullish engulfing candle, literally for the first time since I don't even know how long. I mean, clear back here, guys. I mean, there wasn't even really a bullish engulfing candle after the, COVID crash, right? Right after the COVID crash, okay, you had one. But ever since then, nothing. So this bullish engulfing candle could absolutely be the catalyst that changes the trend, that sends us to higher prices. This bullish engulfing candle is still valid until we get a close below the open of the candle, and that has not happened yet. You've also got the bottoming tails, kind of like a bullish hammer, but more so bottoming tails, which is really nice. So you rallied off the bullish engulfing candle, pulled back, tested the heart line of the channel, which is also that 374 level, which was also a initial new all-time low. And then now you've got a really, really nice setup creating that higher low if it can continue. Don't get me wrong, guys, it could absolutely roll over and continue to fall, but this bullish engulfing candle is what makes me think that we could see the bottom being put in. You haven't seen negative momentum on the weekly MACD since clear back in October. You're starting to build fresh positive momentum. When it comes to the relative strength index, you have continued to make higher lows. You've been rejecting the bearish control zone, guys. So you could not get out of the bearish control zone. You're going back up there to test it. Guys, if we can get back above 40 and get out of the bearish control zone on the weekly, we could be in business. I mean, we could see some really nice follow through and continuation to the upside. So definitely keep that in mind, guys. The other thing I want to show you is if we jump back over to the daily, now that you've seen what I like on the weekly, let me kind of show you what I would be waiting for, right? If I was to just be trading this, I would be waiting for the 3 rising valleys, because it would look something like this, guys. You'd have your first low, and then you'd have your second low, then your third low. So if you just kind of create a path, come up, break the all-time high or the previous high and continue to run. And then you could use a measured move, right? You could take your measure tool, you come up here to the highest peak, and then that would give you your target. And if that happened, guys, we could be seeing something like this. That would take you to $10.88 roughly, right? That's not perfect, but roughly, which is after it dumped and tested the COVID crash, it created the top of the channel right back there in August 2021. So that was also the level that it back tested after the COVID crash. So guys, that would be nice, right? The ultimate level here is 929. Once you get back above 594, which was that low from December, 594 is everything, because that's the COVID crash low. You get back above the COVID crash low, you're going to go test 1188, 1225. And if you get back above that, I'll see you at 16 bucks. I mean, straight up, straight down. There's a couple of times in here where it hugged the bottom and kind of back tested that 1423. You can see it did it here, but most of the time it's straight up, straight down. So keep an eye on that, guys. This is what I would be looking for. I would like to see the hidden bullish divergence develop on like that third low, but it doesn't always work out that way. So you'll just have to watch out and kind of see what happens. One more thing I want to show you guys before we finish up here is the fib levels. So if we take our fibs from the all-time high to the all-time low, take a look at some of the confluence here, guys. So assets typically make a moderate retrace, which is your 382, your 50% retracement, and your 618, kind of that zone there. And so if we are seeing a bottom being put in and the trend changing, that 236 is right there at that COVID crash low, just slightly above it. The 382, that 1423 level, which is those lows from here, that IPO high. Then the 50% retracement is that all-time high from July. And then the 618 is right above the all-time high, which was the level right before it back tested, before it gapped up and went to the all-time high. I'm really mainly looking at the 236 and the 382 and how their confluence lines up with those levels. So those are what you need to be looking at, guys. Again, we could absolutely roll over and continue to dump, but there is no major levels, when it comes to fib levels past the 1272, because the 1414 is negative. So keep that in mind. Again, guys, I love Tencent Music as a value stock. I think there's a lot of potential here. Great asset for any portfolio if you are patient and can hold it for the long term. But let me know what you think down in the comments, guys. I'd love to hear from you. Come over and join us at the Patreon if you want to get all of our trade setups. This video is for entertainment purposes only, not a licensed stockbroker. Always do your own research. I'll see you guys in the next one. Peace.